Now, bringing this back home to Nigeria, the alignment between ESG and non-interest finance presents a significant opportunity. An opportunity to finance infrastructure in a sustainable way, support small businesses through ethical funding models, and drive financial inclusion using technology and innovation, also mobilizing capital towards climate conscious and socially impactful projects. Over the past episodes, we've been exploring a critical and evolving conversation, the alignment between ESG, that is, environmental, social, and governance principles, and non-interest finance. Hello and welcome to Islamic Finance Weekly. I am Rahma Say Mohammed. We've examined the theory, engaged industry experts, and even taken the conversation to the streets to understand how everyday Nigerians perceive ethical and sustainable finance. But today, we take a step further. We connect the dots. At its core, this conversation is about one simple but powerful idea. Can finance truly serve both profit and purpose? ESG, as we've discussed, has become the global benchmark for responsible investing, pushing institutions to consider not just financial returns, but environmental impact, social responsibility, and strong governance. On the other hand, non-interest finance has long operated on principles that promote fairness, transparency, and real economic activity values that naturally align with ESG. So, what we are witnessing is not just a trend, but a convergence. Because this shifts the conversation beyond just what we invest in to also include how financial systems are designed and delivered. In our previous episode, we had an insightful conversation with Ibrahim Lukman, Managing Director of Halal Payment Services, who brought a unique perspective to this discussion, particularly from the lens of financial technology and digital payments. One key takeaway from that conversation is that the alignment between ESG and non-interest finance is no longer theoretical. It is already happening, from ethical payment systems that include financial solutions to energy saving solutions. Technology is playing a major role in expanding access and ensuring that financial services are built on trust, transparency, and accountability.
Most of the consumers now want to know not just how money is made, but what impact that money creates. For example, we're talking about the global emission, CO2 emissions. So these are all infrastructural projects, right, that actually contributes to some of these green emissions. When you look at non-interest finance, it contributes to this conversation because it is built around real economy, right? Fairness, transparency, shared prosperity, and social accountability. And why also discouraging speculative, exploitative behavior, and also encourages capital to flow into productive sectors of the economy, which is one of the key areas that contributes to sustainable development, which one of the key areas that ESG is advocating for, right? For me, sustainable development is not just about economic growth. It is also about building systems that can improve lives consistently without damaging that society. This environment is very important for us, right? This is where we're going to grow up. This is where the future generation is going to meet, right? What we should be thinking as organizations, where do we expect this environment, what kind of state do we expect this environment to be in the next 20 years, in the next 30 years, in 2030, in 2050? That is where the alignment between ESG and non-interest finance becomes very powerful to work closely together.
We also stepped outside the studio and took this conversation to the streets. And while many Nigerians may not yet be familiar with terms like ESG or non-interest finance, something really interesting stood out. People understand the values, they resonate with ideas like fairness, ethical business practices, financial systems that actually support real lives and real businesses. Watch excerpts.
Since they will be impacting on the society, so many people will benefit from it. So why not?
Yes, of course, because besides the profit making aspect, it's also important to consider the customer base, which are citizens.
If it is profitable, no problem.
I will. I'll be willing to invest and work with them because it will help my finances.
I'll be willing because they help them to maintain a sustainable
income and even consider their health and their financial day-to-day income.
If we collect maybe like a mortgage from them, come on, I definitely will choose the one that will even give me profits rather than having interest. Of course, the truth is money is always money.
This tells us that the gap is not in acceptance, but in awareness. Now, bringing this back home to Nigeria, the alignment between ESG and non-interest finance presents a significant opportunity. An opportunity to finance infrastructure in a sustainable way, support small businesses through ethical funding models, and drive financial inclusion using technology and innovation, also mobilizing capital towards climate-conscious and socially impactful projects. But for this to happen, there must be stronger awareness, clearer regulatory frameworks, and greater collaboration between stakeholders. Because ultimately, this is what this conversation is about: rethinking the role of finance in society, moving from a system that focuses solely on profit to one that also prioritizes people, planet, and long-term impact. And perhaps the biggest takeaway from this entire series is this: non-interest finance is not just an alternative, it is a model that already embodies many of the principles the world is now striving to achieve through ESG. As we continue to explore these themes, one thing is clear: the future of finance will belong to systems that are not only efficient, but ethical, inclusive, and sustainable. And with that, I say, don't forget to keep updated to us next week on the program. Follow us on all of our social media platforms displayed on the screen. Thank you for watching, and as always, I am Rahma Say Mohammed.